Thank you, everybody. Thank you for tuning in. So let's do our today's seminar. So as you know, the topic for today is inflation and Toronto's new bylaw and its impact on real estate. So as usual, I'll do my PowerPoint presentation followed by expert panel. And our expert panel today is Kishore, Bhavin, Amit, Prerna, and Herman are our mortgage brokers. And Sandeep Chopra, Amit, and Chris and Murari Lalji would be our real estate lawyers. And then Aga Mirja, he's going to be our architect because we have a special topic today where we need his services. So he will be our expert on that topic. And Sam Gujjar and Mustafa are insurance broker and accountant. And finally, Prasoon and Mohit are our financial advisors. So any questions from the expert panel, please feel free to ask after our presentation. And a quick disclaimer, as we all know, we try our best to get you all the information. But again, if there's any errors there, please take legal advice and professional advice before you take action. Now, today's agenda. So first of all, we'll do our April 2023 market report, and then we'll discuss the recent inflation report and its impact. And then the CMSC has come up with another report just a couple of days back on the household debt. Very important, and we need to discuss that. And then we'll discuss that Toronto's bylaw amendment. And then we would also have a brief description of a new project launching very soon called the 900 residences. And finally, we'll have a Q&A session. So let's start with our Toronto 2023, April 2023 market report. Now, in April 2023, we sold 7,500 homes, which is about 5% less as compared to April last year. And also, average sale price is $1,153,000, which is 8% down as compared to April last year. But as you know, if there's a half glass of water, we can either call it half glass full or half glass empty. So this is calling it half glass empty. But if you look into this way, we sold 7,500 homes this month as compared to 6,800 homes the month before, which means we sold 10% more homes this month as compared to last month. And our average sale price from March to April has jumped up by 45,000, which is a big jump in 1 month. So it's not a weak market, it's a very strong report, right? What's the reason? Why are we again having a strong housing market? And you might all be knowing and hearing this news that now most houses are again selling in multiple offers, and they are again selling 100, 200,000 more than asking price. And again, there's a shortage of supply. Again, the big culprit is supply. We are right now only at a 1.3 months of supply. As compared to the same time last year, we had 1.6 months of supply. So we are 19% less supply this year as compared to last year. Definitely, if we had more homes, we would have sold more houses this year as compared to last year. The only reason we couldn't sell more is supply, right? And that's the reason there's a big pressure on prices, on buyers, and everybody's willing to pay even like 20, 30, 40, 50,000 more than the normal price of the house just to get that house and not left behind, right? So this is being depicted in this graph. This is the average monthly sale price for the last many years. Now, if you look into this dark blue line is actually 2023. We are only behind 2022, which in the beginning was definitely unexpected, right? We were almost at 1.35 as average sale price, 1.35 million, right? In February last year, but then we started dropping last year. So now we are already ahead of 2021. As you could see, this red line was 2021. So we are already ahead of 2021. We are about to meet 2022 as well. Maybe next couple of months, we would be at the same price as 2022 or actually surpass it, right, on 2022, because 2022, the prices came down later part of 2022. So in next 2 or 3 months, the media news will be houses prices 5% more than last year, right? Then everybody will say, oh my God, prices are going up and up. But they're already going up now. And the pace it's going up is alarming. Again, I, as a professional real estate agent, I'm not very happy with the pace it's going up. It's going up very fast, too soon, right? Again, we'll discuss that in a little bit more detail down the line. Now, media has again failed to predict the housing prices. You know what? If you remember, last year, media was saying this is their version. They said in the first quarter of 2023, the market will go down further, and then it will come back slowly by later part of 2023. This was in December 2022. Now, first quarter of 2023, go down. We are already up 10 or 11%. I don't know what they mean by go down. And they said we'll come back slowly, but later part of 2023. Slowly, you're already 11% higher. So can't imagine. Now, this is a report from December 2022. This was a housing forecast for 2023, right? I just want to share the old slide. So this slide, if you look into Greater Toronto area, which is our market here, they were saying by end of 2023, the pricing will be about 1,056,000 aggregate, which means we will be about 2% lesser as compared to 2022. We are already at 1.155. So we are already 100,000 more than their prediction, which they were predicting it will be the pricing end of this year. So you can understand how wrong media could be, right? They want to sell the negative news because negative news, everybody knows, sell more than a positive spin, right? Unfortunately, there's no credibility left. And more importantly, there's no accountability. They can say this and they can say it again and again. They're wrong again and again, but no accountability. People make decisions based on all these reports. People lose a lot, but no accountability. This is monthly stats for 2023. We started for 1,037,000, which was the lowest point, and that was the bottom. If you remember, if you joined my January seminar, I called it's a bottom of the market, right? So we said in January, February, hey, we have already hit the bottom. And exactly, we hit the bottom in January, and we have started going up and up. And now we are already 11% higher this year as compared to January of this year. If this trend continues, imagine by end of this year, this is 4 months, so 3 times 11, 33%, which means will be 30% more, not sustainable, right? I don't imagine that to happen either, right? So this has to slow down, and it would slow down. Why? That's the next topic. Inflation and its impact, right? Now, Bank of Canada, this is again April 12th. That's when Bank of Canada gave their last monetary policy report. In that report, they have mentioned that they expect the inflation to be around 3% by middle of this year. And it should come down by 2% by end of next year. That's their target. They're still trying to stick to their target. But 3% by middle of this year doesn't seem likely. This is right now the inflation. As you know, we were around 7-8% late last year, or mid to late last year. And then we came down to 7% to around 6% around early this year. And then in March, we came down to 4.3%. That's where a lot of people became optimistic and said inflation is already under control and it would probably come down to 3% in next couple of months. And that's why everybody started spending more. And that's why the pricing also went up a lot for the housing prices as well, because we were expecting inflation to come down, hence interest rates to come down. And as we know, interest rates have a very, very big impact on a real estate market. And that's why our real estate market has boomed like anything in the last 2-3 months, because of the policy announced by Bank of Canada. But April, new report came out, and our inflation, instead of going down further, has gone up. Although it's a very slight increase from 4.3 to 4.4, but it's in the wrong direction. Direction is that what matters, right? And that's why now Bank of Canada is worried. And that's why this is as per Robert McAllister. So he's saying what's going to happen to interest rates in Canada? Higher for longer is the buzz phrase in Canada's rate market. So as per him, this market will be higher. And actually, my mortgage broker friends here, all of them can actually confirm it, that we have already seen a bump up in the interest rate in the last week. So the 2 years, this is average. 2 years rate has already gone up by 20 points. 3 years rate also 20 points, 4 years 15 points, 5 years 20 points, which means already the banks have bumped up the interest rates in last week because of this, probably the inflation. So if the interest rates will go up, the market will automatically slow down. Don't expect it to crash. Don't expect it to come down a lot. Now, another worry is there, right? And that worry is CMHC report on household debt. Household debt in Canada is right now highest in the G7 countries. We are sitting around 107%, whereas all other countries are actually way below 90%, right? So Canada, this is for a wrong reason. You don't want to be higher in the debt level, right? US and Canada were about the same in 2010. This dark line is 2010. This light blue line is 2021. So US has come down from 90 to about 80, whereas from 90 to about less than 80 actually, whereas Canada has gone up from 95 to 107. You know what? This CMSC is blaming the higher pricing, unaffordable housing prices, and the interest rates for this debt. Why we are highest? Because of the unaffordable housing prices and the interest rates, right? So this is only other country which I could find is higher than Canada, developed country, is Australia, which is again having a very high housing price there as well. So house prices play a very, very important role in the debt as well, right? So as you could see, US came down from 92% to 78%. UK came from 94 to 86, but Canada went up from 95 to 107. Now, as per, again, CMSC's deputy chief economist, he said household debt in Canada has been rising inexorably, out of control. And about 3/4 of Canadian household debt is from mortgages and interest rates. And country will likely see debt levels to grow more unless unaffordability in the housing market is addressed, right? And who are impacted the most with this debt? Young homeowners are hit hardest. Younger families, they're getting into the housing markets and they're highly leveraged. Now, CMSC report also make note that more affordable housing is the key to bring it down, and interest rates has to come down as well, because interest rates cannot, if the interest rates keep on going higher, then debt cannot come down, or the debt is also like, because of this interest rates, the mortgage amount goes up, and that's how the rental market goes up. And that's how the shelter, which is a big part of this debt as well, is also impacting a lot. So let's now discuss what's the solution. A good step from Toronto is the new bylaw. So in Toronto, the city of Toronto on May the 10th has adopted a new official plan, thereby amending their bylaw, allowing multiplexes at every home in Toronto, whether it's a single family residence, whether it's a townhouse, whether it's a semi-detached, every home is now eligible as long as they have all the means to expand it into multiplex. So this official plan amendment, also referred to as multiplexes. So now these multiplexes are also called duplexes, triplexes, or fourplexes. So these homes could be the rentals or condominium units. And every home can be converted. Either they can be rebuilt or any existing home can be converted into a multiplex as per this new bylaw. Why we needed this new bylaw? What was the need? You know, last year in 2022, 950,000 newcomers came to Canada. In 2023, we are expecting more than 1 million newcomers to Canada. So which are immigrants, which are approximately 500,000. Then there are also students. Then there are also work permit people. Then there are also people coming as refugees from other parts of the world. So there's a lot of people coming to Canada every year. And in fact, our federal government wants to boost immigration even more, as we all know, right? So which means when these people come, as we know, majority of these newcomers come to GTA. And there's already a big supply and demand issue. There's already a big housing crisis. There's no land left to build new houses in GTA, or especially in Toronto, right? So that's why this is a step in the right direction. So what it will do is, as you know, we are going through acute shortage of rental units. Rents are going up by double digits every month for the last many years, or every year for the last many years. And it will create more rental units, and hence it will ease some pressure on rental units. How much impact it will have, only time will tell. But yes, it's a step in the right direction. Other regions will be under pressure to follow as well. So now other regions like Durham, York, Peel, Halton, they may also follow suit. They would be under pressure, which will create more rental units in other parts of GTA. So probably that will help to ease this problem. Now, what does this actually mean to our real estate market? New end users will be now more eligible, or will be able to qualify to buy the homes which they were not eligible before. You know, a lot of people, when they come to us, young families, having good professional jobs, making, say, close to 150,000 to 200,000 household income, they're not even able to buy a freehold townhouse because it's close to $1 million. And with current rates, they only qualify like $700,000-800,000 mortgage or 900,000 mortgage. So with this new bylaw, if you have, say, 2 or 3 extra units in your home, the mortgage companies, the banks, will actually consider your rental income to qualify you. So they would be able to afford these homes. And not able to qualify, they'll also be able to afford. Now think this way. If you have a house, even if your mortgage is, say, now 5,000, 6,000 per month, but if you have 2 extra units or 3 extra units in your house, 2 units can give you $4,000 per month rental income. And if you're paying a 5,000 to 6,000 mortgage, you're only paying less than rent of a 1-bedroom apartment in GTA. And you are going to own a house with triplex or fourplex or duplex in your own house, right? You know how much is the average rent for one bedroom apartment in GTA right now? It's about 2,300. So which means if you can live in a house by paying a similar amount of money per month, you should be laughing. Also, this is going to bring an excellent opportunity for investors. Investors would also be able to qualify for more properties, for more loan, because if they can show that the house they want to buy is a duplex, triplex, or a fourplex, all that rental income will be used to offset their debt. And they can qualify and buy those properties which they could not qualify at this moment. And also they will have a good positive cash flow from these properties by renting 2, 3, 4 units. If you are able to rent 3 or 4 units in one house for 2,000 a month, say roughly, you can have $6,000, $7,000, $8,000 rent per month. Your mortgage will be probably 5,000, 6,000. So it will be definitely a positive cash flow then, right? Then it actually means prices will rise further, right? So there's already a challenge. There's already no land left, as we know. Toronto is also already very expensive. So, but now what it will do is a lot of people will try to move to Toronto because Toronto is allowing like triplex or quadruplex. So people will say, let me buy a house in Toronto, convert into triplex or fourplex, and then live there, right? So which will create more competition among buyers in Toronto. More demand always means short supply, more shortage homes, and hence more prices. So in short term, it will create more pricing in GTA. So before it happens, because right now, this is very, very new. It just was announced on May the 10th, about 10, 15 days back. It's still not implemented yet. It's still in the works, right? So which means before it actually starts happening, before people start actually moving back to Toronto and start buying and grabbing these homes, you need to take action. You need to understand. You need to have a vision. You know what? As Margaret Thatcher has beautifully said, don't follow the crowd. Let the crowd follow you. Before everybody lines up and they want to buy these homes, which are going to be multiplexes in GTA or in Toronto, you need to be the first ones. And you need to take advantage of this opportunity. Now, let me quickly introduce a very good project in GTA called 900 Residences. This is an excellent opportunity. It's going to be launched on June the 6th. You know, if you go to Toronto and look into the buildings, our Toronto's buildings or Toronto's architecture is very boring. You know why I said that? When you look into the buildings in downtown Toronto or anywhere in GTA, they're normally straight, normal buildings going up like skyscrapers, but no architecture. If you have been to Europe, I know many of my clients, you have gone to different parts of the world, go to like Italy, go to France, go to like these beautiful European cities. You would be amazed by the architecture there. Every building is beautifully built. But in Toronto, most buildings are very boring. So this is going to be a building. I'm sorry, someone is unmuted. Can you please mute yourself?
Sorry.
Thank you. Thank you. Yeah, so this building is going to be a new architecture, right? As you could see, the building is widening as we are going up. Not only that, it's also tilting. So there'll be 4 such buildings at this location. And this will become a new landmark in Toronto. People will remember this building. People will know this building. Hey, that curved building, that beautiful landmark, right? So it will become a landmark. So if you want to own a piece of this landmark, don't delay. It's going to be a beautiful building, very nice upgrades there, very good developer. an excellent location. It's in Toronto on Eglinton and 427. So, which means next to the highway. On Eglinton means next to the LRT. 10 minutes to the golf clubs, 5 minutes to the groceries, 3 minutes to the restaurants, and most importantly, this is going to be only 5 minutes away from Pearson Airport. And you know why I'm quoting about the airport? Toronto's Pearson Airport is the biggest employer in GTA. We have almost 50,000 employees at GTA, at Pearson Airport. So all those employees want to stay closer. Most of them want to stay closer to the airport. And this will be the closest building to the airport. So hence the demand would be like very high. It will be very much in demand. Official launch, as I said, is going to be June 6th. And you want to be the first one to have access to the very first phase 1 pricing. As you know, as every new building is launched, the builder always have a lowest price in phase 1, then they keep on increasing the prices. So you want to get the best pricing at the lowest prices at the best time. So first phase, but don't wait till June 6th. We have a very, very special relationship with this builder. We can secure the suites of your choice, but time is the essence. Contact us to pre-book best suites for you at the best price. Don't delay. Again, I love, as you all know, I love this slide. I want to share this slide almost in every presentation. This shows that average sale price in GTA was 1970s, about 40,000. By end of 2022, we were 1,189,000, which is average growth of about 6.96% for about 50 years, average for last 50 years. For the next 30 years, even if we grow by half of that, 3%, we will be at 3 million. If we grow at 5% for next 30 years, we will be around 6 million. So definitely our average price in next 30 years by mid-50s will be somewhere around between 3 to 6 million. You don't want to miss the train. Right now, anybody who's buying at 1.2 million roughly is saying, oh my God, I should have bought maybe 1980s or 19s or early 2000s, right? Or 1970s if I could, or my parents should have bought it for me. But now is the time, because if you buy now, in next 20, 30 years, you would be amazed how much growth it can bring. So don't delay, book your one-to-one meeting with us and we'll be happy to assist you. Now we'll open the Q&A session and thank you all. Yes.
Thank you, Sanjay. Beautiful presentation.
Thank you. Thank you, sir. Yeah. Anybody having any questions? For especially, as I said, we also have our, I hope Agaji is here. Let me just double check. Agaji, are you present in the seminar today? Yeah, he is. I can see that. So Agaji is also here. He is our architecture, or architect. So if anybody have any questions regarding this new bylaw or any questions to our mortgage brokers, please feel free. But you know what, before anybody else asks a question, let me ask our mortgage brokers, because I read this recently that they have already bumped up the interest rates. So if Kishore or Bhavin or Amit or Prerna, anybody or all of you maybe can at least confirm it that the interest rates has already started going up.
Yeah, Sam, I can. Sorry, you go ahead, Bhavin.
No, it's actually Amit.
Amit,
The
yeah.
rates have already gone up. Lenders, just as an educational piece, lenders have different ways that they measure the fixed rates. Some do weekly, some do daily. So half of them have already bumped up their rates. Most likely the other half will follow suit as of Monday. And then there can also be a projection of another 20 to 30 bip increases following the next week's based off the bond market trends.
Wow. Great. Thank you, Amit. Any other comments?
Is it for, are you talking about private mortgage or bank, financial institution bank rate, interest rate?
We're talking about the bank rates, the fixed rates.
Fixed rates, okay. Got it.
Sure. What is CIBC think?
I mean, it's gone up, but it still hasn't surpassed like, February mark, right? I think the rates are really peaking in February and then they started coming down. So it is going up, but it's still lower than where it was in February. And in February, March, the market was still fairly active, I would say.
Yes. No, definitely. You know what? It's only, I would say, 20 points, 25 points, 30 points, or 15 points, whatever is the raise. It's only maybe just a sign, but its impact is not that huge. Imagine we have raised like from 2.5% to 6%,
Yeah.
right?
I
So
would appreciate if everyone mute because there's lots of noise coming in at the background.
yeah, let me mute everybody.
Yeah.
So I muted everybody. So anybody who's asking question can please unmute them. So yes, Kishore, thank you. And so CIBC, how much increase they did? 25 points or less? Kishore?
You're muted.
Sorry. Yeah, no, it's 20 basis points across the board.
20.
But like Amit said, it might just be just a precursor to another impending jump coming along, right? But a lot of people, just where rates are, pre-approvals and locking rates is a big thing now, more than ever. People are more prudent to lock in rates as long as they can. So I think there's a good chunk of people or buyers still, shielded from these increases because they were holding on to those pre-approvals.
Yes. Yes. No, that's great. You know what? I also read somewhere that this year, the 5 years rate is very low. Most people are taking 2 to 3 years rates.
Correct.
Right. So this is probably also a reason everybody's expecting the rate come down in next probably couple of years.
Yeah.
Right. And I think that's the right step. Is that right?
Correct. Majority of the market is in a 2 or 3 year fixed. And remember, when most bank mortgages, you can early renew when you have less than 6 months left on your mortgage. So think of a 2-year term as an 18-month term, or think of a 3-year term as a 2.5-year term. And even the markets are priced such a way that they're all bracing for a descent within 24 months.
Perfect. Great, because I get asked this question many times. Normally every client asks me, hey, should I go fixed or should I go variable? Right. So again, that's why I asked this question. Thank you. Yes. And I know there's one question. Anilji has also raised hand before Murliji. So Anilji, you go first.
Okay. Hi, everybody. I don't know whether my question, actually, I have got the question. My question is related to your policy, the new policy.
Okay.
And I would like to know, as I understood, this is, a similar kind of policy. That means I have a plot of land where I can raise 4 floors and sell them independently. Is it so?
Okay. Good question. Very good question. Agaji, are you there to answer this question?
So you want to sell 4 floors separately?
See, that's what they mean, that you can build up to 4-plex, right? That's what Sam mentioned in the beginning. So what I understand is that, okay, let's say I have a piece of land, I build 4-story building. Okay, each floor has a separate family residence, an apartment, and I sell them separately to them.
Yes.
Will that get registered in the, in as per the Canadian laws? Okay. So this is
I got
my
your
question.
point. I got your point. Thank you.
Let me explain a little bit what I understood from his question. If the land is basically commercial, the chances are good, but if it is like a residential, especially like houses. So in that situation, the government has allowed you to have triple X, 4X, and the basement apartments, but the ownership will remain normally one person. So you can rent it out there.
Okay, okay,
Yeah,
okay.
that's the
That means
difference between a multiplex and a condo. So if you want to sell 4 separate units to 4 different people, that's what you're asking.
Yeah.
That means they are each individually owned condominium units
yeah,
normally, right?
yeah.
So that probably, again, this law is still in the works, and Agaji would be doing more studies on it. I know he's already working on it.
See,
But
so
existing
as
homes,
I
we can
understood from
only,
Mr. Anand,
yep.
that means one can build a building
Mhm.
and rent it out.
Yes.
Is that true?
Yeah.
Okay, you remain the owner and you have rented out. See,
Yes.
the whole thing is shortage of housing is available in Canada. That is true, right?
Mhm.
Because of your number of immigrants landing into the country. So this shortage is going to continue. That is why possibly they are, sort of encouraging people to invest, and somehow, you make money from your rents and there are houses for people who land in the country.
Exactly.
That's what I understood. Is it
Yep,
true?
exactly. That's the main criteria. They're trying to create more rental units. Their main idea is to create
So
as many
tell me
rental
one
units as
thing.
possible.
Let's say if they are encouraging you to invest your hard-earned money into any project, okay, fine. That means I am helping the Canadian government to create 4 more residential units with my money. Fine, I'll be getting rents. Is there any advantage to the investor on anything on the tax part?
Anilji, this is a very new topic. There's not much information available yet. We'll
Right.
get more information once it's available. We want to give chance to everybody to ask few questions, and time is very limited. So we'll definitely, what we can do is I'm planning to do one more seminar, especially on this only, where we would discuss this topic into much, much more detail, where we would have more, and by then, hopefully we'll have more details. And then Agaji, and probably we can have a couple of other people who would know more about this information, and we'll definitely share. But at this moment,
Okay.
this is the only
I just
information.
want to share some information, like when you go, especially for basement apartments, because
Yes.
all the people, the prices of the houses these days are rise. So previously, like most of the municipalities, they were asking for second unit dwelling in the basement to have a 3 parking. So only those houses which is like 2 double car garage qualifies, and sometimes they do not qualify. But the good thing about this Bill 23 after all these single car garage qualifies, and they reduce 3 parking into 2 parking. So basically, if anyone want to do a basement apartment for their mortgage support, even semi-detached
Okay.
townhouses, single car garage, they can do that. In addition to this, if you have a big basement, let's suppose the house is big, so you can have 2 basement apartments.
Yep.
So that is the information I would like to share.
Okay. Sam, one last question, please don't mind. How is this policy different from the multifamily apartments? This policy was already existing. I could have owned a multifamily property and rented out to 5 people.
I'm just explaining what the way it is happening,
No,
especially for the basement
let me
apartment.
answer this question, Agaji.
Yeah.
What they have done is, Anilji, initially you were only had zoning, you could not make that multiplex at every location. The zoning has to be for multiplex. Now they've
Right.
changed the zoning so that a single family home, which was not allowed to have a multiplex before, or
Okay,
now is allowed to have a multiplex at that location. So which
okay,
means
fine.
it will give more opportunity to more people.
Right. So it has
Yeah.
been, you have expanded the range. That's all
That's
you have
right.
done.
That's
Yeah,
right.
if someone has a house, like it has 3 levels, so basically
Yeah.
it is converted into a triple units and the basement additional, and every floor has their own kitchen, dining.
Understood.
living space.
Now it is clear.
Yeah.
It's only
It's a zoning
expansion.
bylaw.
of the-
Zoning
Yeah,
bylaw.
yeah.
Yes.
Fine. Thank you.
Great.
Samji, I would like to share one information for the knowledge and to the
Yes, Murali.
mortgage people and the realtors. So in recently, there was an issue that the realtor signed the agreement of purchase and sale for condo unit and waived the condition of status certificate.
Mhm.
And the client says that they were not aware of that condition. So there is just a pretend everybody knows about it, but there's a defense of client, the buyer, that the realtor did not disclose about the status certificate issue. And finally, the status certificate, when it was went to the bank or the A lender, B lender, every bank financial institute declined the mortgage. The reason was the reserve fund negative.
Yeah,
So
building was blacklisted.
no, building is not blacklisted. So it's a
No.
strange case. It's a strange case. So the building got approval of the bank for $5.5 million for future loan for major repair. That may be after 2 years. But the condo management says it is a liability, even it is an approved loan for after 2 years, 5.5 million is the liability of condo. So whatever money is there, so that 3 million is reserve fund, but they are showing now 1.7 million deficit.
Murari, thank you for the information. You know what? Again,
Yeah.
respecting the time, we only have 10, 15 minutes. I know a lot of questions for a lot of people. This
Okay.
may be helpful for many people. And again, in our team, we do not waive conditions until unless our lawyers have reviewed it. And our
Yeah.
lawyers are all like you and Sandeep ji and Amit and other lawyers. They're all very qualified. We have seen few examples where Sandeep or you have told us not to waive the condition because of the low reserve fund, and we don't go through that issues. I know some people do it, so don't worry. Thank you for this.
Just sharing the information. Yeah.
Yep. Thank you for the insight, Hanji.
Welcome. Thank you.
Yep. Yes, let's, I know there's a few questions in the chat. So I know someone is asking, please have a dedicated session. We'll do that. Now Ravi is asking, if it's not a secret, can we 2 or 3 years mortgage rates as of today, looking to convert from variable to fixed, and this will help. Also, is it good time to convert from variable to fixed who missed to do before? Very good question, especially for the mortgage brokers. Ravi is asking if 2 to 3 years rate is the way to go at this moment, and people who have gone to who have the variable rate at this moment, should they right now fix it for 2 or 3 years?
I can take this one, Sam.
Yes.
So when you transfer from variable to fixed, there might be certain limitations on your lenders because, for example, at CIBC, you could only go for a 3-year fixed or greater. So a 2-year fix might not be an issue, might not be an option. Again, it might vary from lender to lender, but it might be worth looking into because if the difference between your fixed and your variable rate, you get at least a 1% difference now, it might be worth looking into. You just give them a call. And remember what I said, most banks have an early renewal provision. So even if you take a 3-year rate, don't think of it as a 3-year rate, it's a 2.5-year rate. And you're betting that in 2.5 years, prime will come down at least 1%, which is a very reasonable bet.
Yep. And at the same time, look into this way. What's your variable rate? If your variable rate is prime minus 1%, which some of them have it, right? Yes, ways, right? So you're already at around, say, 5.5 or 5.7 or whatever, 5.7, I would say, right? So if you can get a variable rate, which will be even say 5%.
Yeah,
So
a fixed rate, yeah.
Right? You're still saving 70 points.
Correct.
Which is the I think, the best variable rate you'll have. Other people
Correct.
may have prime minus half.
Yeah. Yeah.
Yes, probably you're right. There is some way to save money, at least for a year and a half.
Correct. And you're insulating yourself from any future jumps. So that's another added benefit.
Great response. Great question. Thank you, Ravi. I think other mortgage brokers also agree to it. Is Bhavin, what do you think? Any different view?
No, Kishore said it very well. I think it covers all the basis points. Yeah.
Okay, so all the mortgage brokers agree that if you have a variable rate at this moment, it may be a good idea to fix it for a short term.
I would just like
Please
to add
look into it.
something.
Amit, yes.
We have each individual is different. So Kishore said it very well. But we have to look at each individual differently because it also comes down to what your mortgage balance is. And also, if we really want to deep dive into it, what is your average interest that you're actually paying versus when you first started to where you are today? So we have to, it kind of comes down to more of that financial advising side. Can you hang on to the variable side? Can you cash flow it? Because variable rates are projected to come back down and so are fixed. So if you can hang on and tough through it, then that is the better recommendation, because the penalty to also break the variable to go to another lender for the lower interest rate may actually not make sense, because you'll actually be paying much more compared to what your savings would be. So you have to really deep dive into it and really see, is that actually the best solution for yourself?
I like that. One size doesn't fit all. Right? You know what? On the same line, I know there's one question being asked in the chat as well. What are your predictions? I think Saurabh asked this question. What are the predictions of the interest rates by the end of this year? Any guesses? I know we shouldn't be making guesses and we should not be predicting things, but at least we should have a educated information.
Variable rate, I think there's going to be another 0.25% increase. So you'll be looking, again, depending on the lender, prime minus a half, prime minus 0.8. Fixed rates, again, we know how COVID was, where previous data didn't actually occur. But based on where previous data is from the 08 recession, we may see another 0.75 to 1% decrease in fixed rates, possibly by the end of the year. It depends also on what the US Feds do, because we follow a lot on what the US government does, and that can impact how we react.
Good answer. Thank you. Any other mortgage advice on the interest rates by the end of this year from other experts? Different opinion? Or should we assume everybody's in the same place at this moment? I know Kishore is thinking.
It's one of those topics where a lot of people don't give their opinion.
There's too many moving pieces, Sam.
No, I understand, but you know what? That's why it's also a very burning question. A lot of people want to know, and this also has a lot. The reason I want to get a little bit more information on this one, because this is going to have a big impact on our pricing as well. Right? Because interest rates, doesn't matter what happens outside of interest rates, but the interest rate is the biggest factor that drives our real estate market.
Correct. But I think you said it well many sessions ago. You date the rate, you marry the price.
Thank you for reminding. Yep, you know what? I think this is the best tagline we have used in the past. Hey, date the rate, marry the price. So definitely, as we all knew, now we can say for sure, January 2023 was the bottom of our housing prices, right? So we are already, as we have shown in our slides recently, we have already gone up by 11% average, right? But again, I also want to point out, average, don't go by the average. Average means average for all type of homes, right? Now, keep in mind, there are homes which sell less than $1 million. And those are the most homes which sell in the market. And then there are homes which sell between 1 million to 1.5. And then there are homes which sell more than 1.5 to 2 and higher. So very few homes are sold between those high-end homes, right? And more homes are getting sold in the lower market. When the more homes are getting sold in the lower market, the average actually comes down, right? Because average is the average of all the home types sold in GTA. So average sometimes doesn't give the right picture. To get the more details about the type of homes anybody's interested and to find out what is the average price of that particular home and how is it moving, please contact us and we can do an analysis. We have analysis of every type of homes and we can show you what is how that segment is moving. And should you be buying it right now? Or can you wait? Or what is the trend for that particular segment? That was just a thought. Yes, any other questions from anybody else? We have probably 5 more minutes left. So good time to ask any questions which you have in your mind, either about the new bylaw or about our inflation or about any other topic you have in your mind.
A quick question for bankers. Suppose the customer, the client, the borrower has locked the rate with the fixed rate in the past 2.5 or 2.6, and now that fixed rate is 3.5 or 4.5, whatever rate is. If they want to pay off the mortgage, so whether the rate differential amount, so it will be 3 months interest penalty, or again that will be calculated on the fixed rate differential amount. Questions for bankers.
It comes down to the lender and it comes down to the payout date. So it's actually hard to calculate this because there's many variables that come into play. So number one is what type of term are you in? Number two is who's the lender, because each lender has their own different policies. And number three is what is the payout date. So there's actually no correct answer I can give you because there's a lot of moving parts on that one.
Thank you.
Very well said. Thank you. Also, I want to remind everybody about this special upcoming project of the 900 residences. Someone has asked me, hey, do we have the pricing for these units? And if I can send those, I can send you the approximate average prices of the type of units. Like, for example, what will be the average price for 1 bedroom, 1+ den, or 2 bedrooms, or etc. So we can give you a ballpark figure. And we can, as I said, based on that, we can pre-book your units in advance before June 6th. Because once the project is launched, everybody would like to buy the best price units at the best possible price, right? Where people want to fight with each other. And then people would have to submit worksheets. And after they submit worksheets, it will be sort of a lottery for the best units. But as I said, with our relations with this developer, with this builder, we can get you the unit you want for the best price and the best suites before other people can get the dip. So we have a first dip, right? So please reach out to us if you have any need for any units in this project. It will be a great project, very good for end users as well as for investors. Location is excellent, right? So any other questions about this project, please feel free to ask me now or reach out to us and we would be able to help you out.
Hi, Sam. I have a good piece of advice. I know most of the attendees here in the webinar is investors, but there are a lot of first-time home buyers actually, and the government has quite a bit of good programs actually launched recently, first-time home buyer program. And what I can help people who's into that category, first-time home buyer, is that if they have an RRSP room available, we can arrange the down payment for them. So suppose there is a couple, they have a $35,000 each room available. We can get them a loan of $70,000 from one of our partners. and get them fund into the RRSP. And when they file the taxes, even if they're 30% marginal tax rate, they get $21,000 back from CRA. So altogether, they have almost $90,000 available for the down payment of the house. Number one. Number two is they only have to keep for 3 months that money in RRSP, and they can withdraw without paying any taxes. So this is one of the very good way to find a down payment for the first time home buyer.
Very good advice. Thank you, Prasunji. So yes, great program, RRSP program, especially for first-time buyers. Again, Prasun has given very good insight into that. So if you are first-time buyers and you want to take advantage of this opportunity, reach out to one of our financial advisors like Prasunji, and he's very qualified to guide you on this process. Thank you. Great. Last 2 minutes, maybe the last question. Anybody have the last dip?
It looks like everyone is.
Sam, do we have square footage price at least as you calculated from this project, 900 residences?
Good question, Haji. You know what? The Haji saying what's about average sale price for this project. But I would say is right now in GTA, the average sale price for any project, and I say GTA, doesn't matter whether it's in Toronto, whether it's in, say, Vaughan, whether it's in, say, even Durham, like Pickering, or whether it's in Oakville, or sometimes even in Hamilton, the average sale price is anywhere between 1,100 to about 1,800 per square feet. That's going on. Minimum is about 1,100. And the most people are paying is $1,800-$1,900 in downtown, right? Actually, there's another project getting launched right now in downtown on York Street. That is actually going to, on Yorkville, sorry, that's going to be almost like $1,900 per square feet. But this project at a very good location, one of the best architectural plan, will be between around, say, around 1,200 per square feet. Smaller units will be around 1,200, 1,250. Bigger units will be lesser because it's always the bigger units give you more break on the price. So that's roughly the range. So I would say between 1,150 to 1,250. That's the range, depending on the type of unit it's going to buy. Very good price for this location. Very good project. Very good builder. And the suites will sell like hotcakes. I can tell you in advance. Especially the first two project, which first phase one, which has 2 buildings, which I just shown you on that slide. They will have commercials at the bottom and then residential on the top. Also, they have a lot of space, green space around the project for the people who live there. Very nice project for end users as well. Thank you. Thank you, Haji.
No problem.
Great. I think we have answered most of the questions, and any more questions you have, any more information you need, please reach out to us. We would appreciate. And the time is now 11, and I appreciate everybody's time, the time you have taken out of your busy schedule. I know it's not easy, especially in the weekends like this when the weather is beautiful. Everybody must be having pressure from the family. Hey, what are you doing? Come out. We want to go out, right? The kids must be screaming at your back. So I really appreciate you have been so consistent and sticking with me for about an hour on regular basis. So thank you for the time, and thank you for all your support. We have been successful because of all your support. So thank you.
Thank you.
Clients.
Thank you, Sam. Thank you.
Thank you. Thank you, everyone.
Thanks, Sam.
Thank you to the
Everyone.
expert panel.
Bye.
Thank you, Sam.
Have a
Bye.
good weekend. Bye.
Have a good day.